typically able to return 6, 7, 8, 9% compounding net of those recurring fees. The second part of the way we do that is we cash flow our fees. And this, I think, is unique to us as well, the way we structure it.
Two things. Number one, that there's basically no pressure to do the DST. There's zero cost for due diligence, but then also if they decide to move forward, there's a lifetime audit defense that's connected to it. Can you talk about that?
Yeah, let's touch on fees, and then let's touch on the lifetime audit defense, right? So there's really kind of two sets of fees, right? There's the one-time legal setup, which includes lifetime audit defense with the DST tax attorneys that we work closely with to form these. Okay, and so they do all of that, and as a part of that too, we all work on a conditional engagement, meaning if for some reason the deal doesn't work out, the buyer doesn't buy, or you just don't want to use the trust towards the end, which is pretty rare. Most people, when they get with us and they get engaged, they see it through. But even if you didn't, no problem. There's no pressure. You don't have to use it. You owe us zero. There's no obligation. Okay. But the fee is basically 1.5% of the gross sales price on the first million, and then 1.25 on anything above. So let's just say it's a $3 million transaction as a gross sales price, 15,000 on that first million. And then you take that second, the remaining 2 million, you do 1.25%, it's 25,000. So the total is about 40,000 would be the legal fee on that $3 million deal. On the $15 million deal, it would be larger. It would be 1.25% on the 14 million and then 1.5% on the first million. And again, that's a one-time fee paid only at close of escrow if the deal closes and if you use it. It covers lifetime audit defense, which also we'll touch on this right now. It's over 27-year track record, thousands of closes, billions and billions and billions of assets, gross asset sales values used it over all the years. Cryptocurrency, business sales, primary homes, businesses. Of course, we've also saved failed 1031 exchanges. We do have the best 1031 exit plan, by the way, which allows you to have a traditional 1031 exchange, the full service, along with the deferred sales trust as a backup plan, and have our team help you navigate that through. As well, be able to use the Delaware Statutory Trust in case you need to use that for some debt over basis challenges. You can go to experttaxsecrets.com to learn about that. That's the first fee, okay? The second fee has to do with the actual trustee management, okay? And that's our company, Capital Gains Tax Solutions. So the way we earn capital or earn our fee is by basically managing the trust and helping and aiding the compliance, the tax returns, the profit and loss statements, the reporting, connecting with a lot of times certified financial planners, connecting with real estate groups that are investing, and essentially that is our role as the trustee. And we get paid along with everything, including all of the advisors, anyone else that we bring in. Is typically it's about 1.5% to 2% on a recurring basis, year in and year out, on the net proceeds. And so if you sold something at $8 million and you had a $5 million debt to pay off and only $3 million hit the trust, well, we get paid just on that $3 million. Now, if you sold an $8 million deal and all $8 million, no debt, goes in the trust, we get paid on the $8 million. So this is simple math on that. If it goes, the higher it goes, you get some fee breaks along the way. However, we're typically able to return 6, 7, 8, 9% compounding net of those recurring fees. The second part of the way we do that is we cash flow our fees. And this, I think, is unique to us as well, the way we structure it, is that we're going to get this plane off the ground at the sale, and we're going to wait typically 2.4 months in order to get the interest accruing and earning on the trust, and then it pays us. In other words, we're delaying gratification. We're aligning ourselves with the trust long-term success and your success by not charging those fees at closing. Campbell, the law firm we work with, they charge at closing, but we charge along the way. So hopefully that answers the question. There's also a tax return fee, maybe some bank fees, add up to be around about $1,500 to $2,000 a year. However, even net of those recurring fees, we're able to return that typically 6 to 9% down.